Hey guys, in this video I'll show you how do credit cards work in United States and how you can save your money while living in United States. So let's discuss how credit cards work. Credit cards can help you build credit while offering convenience. Table of contents. What is a credit card? How credit cards work, credit cards versus debit cards, how to compare credit cards, the bottom line. When you need to make a purchase or pay a bill, credit cards can offer both convenience and the potential to save money if you are re-earning back some of what you spend in rewards. At the same time, you can also use credit cards to build credit history through healthy financial habits. While credit cards and debit cards may look similar, they work very differently. If you are new to using credit, there are few important credit cards facts to know. Key takeaways: credit cards have a credit limit you can make purchases against, then repay at a later date. Carrying a balance on a credit card can trigger interest charges. It's important to read the fine print closely on credit card promotional offers. Some credit cards allow you to earn rewards on purchases in the form of points, miles, or cashback. What is a credit card? A credit card is a physical card that can be used to make purchases, pay bills, or depending on the card, withdraw cash. The simplest way to think of a credit card is a type of short term loan. When you open a credit card account, your credit card company gives you a set credit limit. This is essentially an amount of money the credit card company allows you to use to make purchases or pay bills. Your available credit is reduced as you charge things to the card. You then pay back what you spent from your credit limit to the credit card company. Credit cards can be secured or unsecured. A secured credit card requires a cash deposit to open, which typically doubles as your credit limit. How credit cards work? Credit cards can be used to make purchases online or in store and pay bills. When you use a credit card for either one, your card details are sent to the merchant's bank. The bank then gets authorization from the credit card network to process the transaction. Your card issuer then has to verify your information and either approve or decline the transaction. If the transaction is approved, the payment is made to the merchant and your card's available credit is reduced by the transaction amount. At the end of your billing cycle, your card issuer will send you a statement showing all the transactions for that month, your previous balance and new balance, your minimum payment due, and your due date. The grace period is the period of time between the date of a purchase on your card and the due date listed on your statement. During this period, if you pay your bill in full by the due date, no interest charges accrue. But if you carry a balance month to month, your card issuer can charge you interest. Your credit card's annual percentage rate or APR reflects the cost of carrying a balance on an annualized basis. Your APR includes both your interest rate and other costs. Costs such as an annual fee if your card has one. Most credit cards have a variable APR that's tied to the prime rate. This means your credit's APR can change over time. So the Card Act of 2009 sets strict guidelines on when credit card companies can and can't raise your rate. Credit cards versus debit cards. A credit card and debit card may seem like the same thing, but they are not. When you make a purchase with a credit card, you're not actually spending any of your own money at the moment. Instead, you're spending the credit card company's money, which you then have to pay back, potentially with interest. Debit cards, on the other hand, are linked to your checking account. When you make a purchase with your debit card, the money is automatically deducted from your bank account as soon as the transaction is processed. There's nothing to pay back later since the money has already been taken from your account. Debit and credit cards are also different in terms of their credit score impact. Using a debit card has no impact on your credit score because your bank account activity is not reported to the credit bureaus. Credit cards, on the other hand, can impact your credit score directly. Credit score, for instance, calculate your scores based on payment history, your credit usage, credit age, credit mix, inquiries for new credit. Making credit card payments on the time can help you score, while paying late could hurt it. Simply keeping a low balance compared to your credit limit can have a positive impact, while maxing out your card limits can detract from your score. Another key level difference between debit and credit cards lies in fraud protection. Federal law offers more fraud protection for credit cards than debit cards. This chart highlights your liability for unauthorized transaction with debit and credit cards. That's it for today. Let's meet in the next video.